I want to welcome everybody who's joined us via YouTube also. Today's session of How to Make Money Trading Stocks. We're going to take a look at comparable strength between the indexes, and also when is a good time to look at the actual index charts rather than the ETF charts. At the end of the session, hey, watch it till the end because I'm going to cover a couple of stocks that you may want to look at investing in the very near future. That could be setting up next week. So if this is your first time with us on YouTube, please just basically subscribe, hit the bell, and also, if you will, give us a nice thumbs up so we can get ready to go. So at the end also, I will show you about how to connect so you can get updated on our best growth stock watch list that's available on the internet. And so, Steve, yes, we could hear you. I hope you could hear us also. Let's get going. Hey, I just put this in there because, gosh darn it, there's a whole heck of a lot of folks. We're in a dire straits right now. We're trying to we're trying to basically come together and get through this quarantine issue with the coronavirus. And heck, there's a lot of people who are just absolutely critical of all the actions that's going on. And, let me be really blunt. If you're going to be critical about stuff that's going on rather than pulling together, you're part of the problem, you're not part of the solution. So, basically get off the sidelines, get in the fight. Don't be one of those timid souls who neither know victory nor defeat. So with that said, I can there you've heard my rant for the day. Remember that all the trading we do here, what we do with active trend trading is for training purposes only. Paper trade, traders should paper trade any new method prior to the risk of their own personal capital. Really, timely. A market analysis, not much change from last week. We'll see what the changes are from last week. We're looking for a bounce to resistance. This is what I'm looking for. And then basically a pullback to retest the lows or break out below the lows. This is an event-driven bear market with a big asterisk next to it. Normally, event-driven bear markets, they basically hit their low, do a V bottom, and just spring back into action. The asterisk next to this one that will go on the footnotes is that this event is the coronavirus, and it's basically caused just a huge shutdown of economic activity across and around the world. But I applaud everyone who's joining us here today because you're taking a look at it from the perspective of, yes, this is bad. It's terrible that people are needing to die due to this this virus that's pandemic that's going around the world. But we've survived through past pandemics. We, the human race, and that at the end of the day, there will be opportunities that we need to be aware of. Now, you can basically turn your eye and say, well, I'm not going to take advantage of this opportunity. And that I think, would be very short-sighted because for many of us, we're going to have a buying opportunity in the market coming up that basically is a decade, opportunity of a decade. They come around every decade, which reminds me, if you haven't seen it yet, go over to Active Trend Trading's YouTube channel, Market Tech Talk. I did a webinar on Wednesday that basically talks about how do you know when the market's going to come out of a bear market. So as I highlighted last week, stay in cash. The Active Trend Trading System moved our members to cash the last week in February, primarily. Stay engaged, be disciplined, consistent. If you're online today or if you're watching this on YouTube, you're trying to stay engaged with what's going on in the market. I commend you. Just about the time you're going to sit there and go, oh man, this is getting terrible. This is boring. I don't want to get engaged. That's when the market's going to turn around. And, so study past bear market reversals. Again, that's where we put a update on the YouTube channel. Be ready with a watch list of stocks. I know Steve's got a stock that he wants to share with you. I'm going to share 2 stocks with you at the end, so stay tuned all the way to the end. And then we want to be basically ready to wade back in after the reversal days and follow through according to our rules. So take a look at index performance and then a bonus stock from Dr. Steve. So let's get over and, okay, here's where the market is. As of about 9 o'clock this morning, that's 9 o'clock Pacific time, West Coast time. Down, clearly NASDAQ is the strongest, Russell's the weakest, and the other ones are in between. I'm very pleased, when we shut down basically the faucet to our trading, because we shut it down about 4 weeks ago. We've had just a few trial trades that we've done in that time frame. We're sitting on about an 11% gain. Straight on cash flow with no commission, it is 11%. So let's take a look at the indexes, if you will. And I want to start here. And again, I want to highlight first, I want to go through every one of them. The Dow. Take a look at the daily on the left, weekly on the right, and project back. And that's one thing you learned on Wednesday night. Look to the left to see where do we have past support. And as you can see, we broke this support here. Make sure that clicks in there on the Dow. So that is a strong level of support. Also take a look and go over to the, I'm not going to spend a lot of time on the Dow because we typically don't track it, but take a look at, well, what's it doing over here on the monthly chart? Highlight where's the next support. Well, it's already dropped past the support here, and it's got some really good strong support down in this area here, and it's almost made it to that. Excuse me. And so again, as we see, we are approaching, support on the Dow that we haven't seen back since 2016, 2015, and even, if you go down to these lows, we're talking about lows from 2013, 2014. So why do I want to take a look at the indexes themselves? Well, partly because you'll get a purer picture. SPX is next. You'll get a pure picture of the price action that you don't get when you look just strictly at the ETFs. So here's what's going on with the S&P 500. It broke down again. This is that same low that we saw on the Dow, and as you can see, the S&P holding up much better than the Dow. So the S&P stronger than the Dow. So comparative strength looks pretty good as long as we hold above that area. Let me go back to my daily and my weekly. There we go. And as you can see, we're getting some, we haven't turned up yet with our market forecast momentum. However, what we do have here as a, something to keep our eye on, it's not ready yet, is we do have some good positive divergence here as the S&P is making new lows. Similar. So as we see, we have basically a hammer, a spinning top doji, and today's candlestick is not complete yet, but long-legged, in other words, these long wicks on the bottom show that's where buyers came in. So we've got a pretty good idea that this 2346 level, they overshot it, but that's going to be a good level of past support. This 2193 and the 2083, those are past lows over to the left that we'll want to also be aware of if we cannot hold the current level. Let's take a look and see. Look at the daily candlesticks on the spider. And as you can see, not exactly looking the same. There is no hammer. There's in reality no real reversal signal, as you can see, on the spider, which is the ETF for the S&P. So again, I want to go back to the pure price action, which is from the S&P itself, and do that, and then do that really quickly for all of the indexes. So what's next? Well, NASDAQ. Similar type situation. Here we go, look at the NASDAQ. There we go. Now with the NASDAQ, really no good reversal signal on the NASDAQ itself either, except it did come down here. It tested and took out the low from, and this is from back in, well, the other one that we're looking at with the S&P. Hold on a second. Let me check one thing for us. SPX. Come on. See, and just be aware, the low that it took out, SPX, was over here on 2018. NASDAQ, the low that it took out was this one from October, or in June of last year, 2019. It is a heck of a long way from the low of 2018. Hence, this is a beat on the table moment. The strongest index we've seen so far is the NASDAQ. So if the market does go into a rally mode, we might look at the NASDAQ as the potential strongest of the three that we monitor and worth getting in. So what's the cues? Let's see if the cues show us anything else or anything different. And they say, no, nothing really different. No reversal. We do have on the weekly a spinning top doji, or not a doji, but a spinning top, long legs on both sides. And so how do we want to play this going into next week, folks, is take a look. If prices get up towards this high level here, or this low level there, and on the index, or on the S&P, on the ETF, from that low to high, I mean, this is pretty crazy and pretty amazing. From that low to high, there we go. Get it up. Well, shoot. This is about 11%. So if you're trading a 3-time leveraged ETFs, that's a 33% move for a week, which is normally, you wouldn't expect that whatsoever. However, what are we seeing over on the daily chart? We're getting up into the 8-day moving average, and we're rolling over. So we'll see if we fall down from there. And let's see, let's get on to, last but not least, the Russell. And what you'll see from the Russell is weakest of the week. This is that low from 2018. Russell blew totally past that and down. And this $943 one, when did that low come in? Well, let's take a real quick look over here on the weekly monthly. And that came out, sorry, like I said, sorry about that we are still live streaming, so that's good. That's good. And so hopefully it'll all go through for everybody. But as I get over here and stopped at the Russell, the Russell actually dropped, and we're coming down close to past support. We'll see how that works out going forward. So with that, right now, here's what I'm expecting, and I'll just on every one of these. It may or may not work out, but here's what I'm expecting, because this is how bear markets tend to respond, and they've responded like this going back to, well, guess where? 1929. Let's see what, can you? That's a great question, Barry. We'd have to dig in and get into the individual stocks themselves. As far as the majority of it has beat, but is that just a preparation for a dead cat bounce? And so so that I don't know. But here's what I'm expecting, and I'll just give you a picture of it. Is it looks like one. Support is being held. There we go. Support is being held here on the Russell. So I would look at any testing back in there as a potential buy opportunity. If we actually launch out of here without coming back down to retest, I would look for what I call the define the value zones. This is about value zones between the 20-day moving average and the 8-day moving average. As you can see, it might be towards that 1266.92 level. Look for us to move up towards there and then fail somewhere in there and move back down. Now, move back down will be a retest here, or it will blow through that to continue on with the bear market. So that's what I'm looking at. And again, if you have not seen that, take it in the description on YouTube. I will have a link to that video. So Steve, with all that excitement, hey, what stocks do you want us to look at?
Okay, Dennis. Like your analysis. I love your analysis. I agree completely with it. Nothing to really add. The stock I like, and right now I'm taking half positions just because of the uncertainty in the market. I'm still trading fairly aggressively if the setups occur, but I'll do them with half positions.
Okay.
And I had an entry yesterday in Trade Desk TTD, and today there's a ZTO which I think is setting up for a trade, possibly for Monday.
Okay. Now explain what you did here with TTD.
Okay, with TTD, the entry was yesterday, because yesterday on the daily chart, it's also very long term. It's come into a level that I've been watching for some time.
Okay.
But so I was willing to take a trade yesterday. It's been hit very hard, but yesterday was an outside reversal bar day. We made a lower low and a higher high, and we closed outside the range of the prior day. So near end of the day, I took a long position. Stop is probably going to be under today's low by when it ends today.
Okay.
And the other stock I'm looking at is for possibly for Monday, maybe today if the market really strengthens into the close.
Right.
That would be ZTO.
Okay.
And what I like about it is that it's showing a lot of relative strength. It's only pulled back into the approximate area of a 50 MA. It's still in an uptrend, and we've had there it is. We've had 2 inside days after that hangman-like bar 3 days ago.
Okay, right.
Right there. We bounced and we pulled back, had that hangman bar, and subsequently we've had 2 inside days. I love that setup.
Okay.
And if we break the high of the inside day yesterday, that would be a long entry. If we don't make a new high today, then it'll be above today's high. There will be an entry for Monday.
I like it. Yeah, I like that one also. And this is another one of those, guys. Normally, and this is one of the things, just with the particular market the way it is right now, normally I would say, okay, hey, if I pull back into, somewhere in between the, let's say the 20 and the 50-day moving average is about there, let's say 24.55, I would say, well, that's a good place I would want to get in. That would be under normal market conditions. But these are not normal market conditions. So in a situation like this, I'm going to want to, let's see it, bounce back down here and actually maybe retest at the 50 and then bounce back up from there, because this is looking very positive. much stronger than the market, without a doubt. And so I like this one, Steve. And so I wanted to show something just really quick, and we got to hurry along. But your trade on TTD, maybe if TTD, I just want to highlight this to folks, is that Steve entered today on TTD, right?
No. Yesterday, near end of the day.
At the end of the call. Okay, so you entered here. So he's up a little bit, and he entered this fully aware that it could very well just get up here into this value zone between the 20 and the 8-day moving average and stall.
Correct.
Also, he said he a lot of times people will say, well, I'll take it to the swing low to, and that'll be my exit point. Well, in this particular case, because TTD from the high on this day here, let's get that high. Come on. There we go. The high or the low. There we go. Right there is what I want. Down to this low, the swing low, is how far? It's 20%. So he's not going to risk 20%. And so that's what he's saying. And so adjust your stops appropriately. Now, Steve, are you saying if you break today's low, you're going to go ahead and exit this trade?
Correct.
And that is really a wise approach for how to trade this. And so I just want to leave that with you to be considered. So thanks for the 2 great stocks, Steve.
You're welcome. Thank you.
And so, hey, let's get on to getting on. That was excellent. So again, be aware of the cycles. You can go back and look at this video a little bit later on, but just be aware of where we are in the cycles. We have not hit a place where we've actually had full capitulation yet, although we have had 4 historic down weeks in a row. This is the fastest the market has fallen 30+% in history. Now, is it the furthest fall? No, it's not. But for that quick of a run, it is the fastest it's fallen. Be aware of where we probably are. I think we're probably approaching the level of capitulation, but that means we still have some additional downside. And remember, anytime remember this, anytime an analysis says, I think something is happening, going to happen, that is an opinion. It isn't basically cut in stone that that's what's going to happen, because the only thing that's going to tell you what is actually going to happen is the price action itself. That's why when I was suggesting, and again, this is when we take a look at seasonality, and why I was suggesting identify the support, identify the resistance on your daily bars and your weekly bars, and then plan your trades around either one of those. Favor the side that the prevailing trend is on. And right now we are on a prevailing downtrend. And so you may want to wait till we push up towards the top of it and see if prices will push back down. As we say, seasonality, we're in March. We're expecting something to happen in the NASDAQ. I think that what's going on in the market right now, we can just kind of X through on seasonality, because we're in kind of like uncharted territories with what's going on with the coronavirus. Same thing on gold futures. Gold's got just a weird pattern to it, but clearly it is selling off in March, but it's just, it has no rhyme or reason with regard to the seasonality. So I'm not even considering these from a seasonality standpoint. I'm going to take these 2 charts out of this analysis on a weekly basis until it gets back into a seasonal aspect. So again, if you're new to active trend trading and or Market Tech Talk, please check out the training videos that we are putting online. They're really good. I'm trying to share a lot of information because I really my desire is for people who have never invested in the stock market, they be prepared where they can, at the end of this bear market, be able to at least buy some stocks and have a plan. They can, because it's very unfortunate when people buy stocks and don't have a plan. This past Wednesday night, at our small group that we do with our church at our house, but we were doing it via Zoom because nobody can be close to each other anymore. One of the ladies was in tears because she didn't have a plan, and she had been investing in this bull market and just doing really, really well. She was always all the way up to having a down payment to basically buy herself her own apartment. And she was in tears because she has just lived through that 30% sell-off in the market, and the money she had for her down payment is no longer there. And I said, well, why didn't you sell, on the way down? She goes, I didn't know how. And so she was trading it without a plan. And I know Steve probably runs into a lot of people that same way. So just coming up April 4th, Bay Area Moneymaker webinar. Steve, I don't know how we're going to do April 14th. I don't know if we will be back on for the Honolulu meetups or not. And so I do want to remind you that if you missed this, hey, here's a Power Rank Elite Top 5. Identify 5 growth stocks every week. Normally this would be about a $79 value per month, and we offer it for $19.99. And the other thing, $19.99. The other thing about this is that the stocks I'm identifying from, these are the absolute best that Investor Business Daily provides. And so IBD Zoom, there you go. So, hey, until next time, I want to thank Steve for being with us today. We're looking for, I still think that 2020 is going to be an absolutely amazing trading year. We should be sitting big time in cash right now, and we'll see if we can start moving some things around next week. So if you are a premium member, stand by, because we're going to be going at the top of the hour with the final hour. If you want to learn how to become a premium member, you can also just send me an email. I'll show you how to do that. We have a special offering right now. And with basically with the premium members, you get text alerts when we are doing our trades. So you can, oh yes, my 2 stocks. Thank you, Rocco. So my 2 stocks are, one, Steve's already hit one of them, and I will show it to you really quickly. And it is ZTO. 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 Again, for all the same reasons Steve's talking about. I like it when it's down here just immediately off of the 50-day moving average. It is testing down in there. And again, my stop, if I got in at the 50, my stop is going to be no more than 5% away. I'll give you a flavor on that, maybe. So if my stop's just a little bit away, yeah, I can actually go almost all the way down to that swing low and still be within 5%. So that's ZTO is one of the ones I want to be looking at. Looking really good. Because it can ricochet from where it's at right now. And, if it moves back up to the past high, we're talking about a 10% runner. And my other one is Zoom. I think Zoom is going to continue to zoom up simply because businesses are going to still want to do business. Zoom has been is basically just far outshone all the other webinar companies, and they're continuing to make really great improvements. It is extended right now. I'm not going to basically buy it yet. I would want to see some kind of pullback into the 820 moving average, or wait for the 820 moving average to catch up with it. If you're so I am going to be doing a webinar this week. Well, not a webinar, but I'm going to do a training session this weekend. It's going to be basically, I'll post that to YouTube, and what's going to be highlighting is how to utilize the inter-day charts and price action because in some of these, we're getting enough movement on a daily basis to justify taking some short-term trades. But I want to show everybody how to do that. If you're interested in doing that, make sure you're signed up at either activetrendtrading.com or I'll be posting on Market Tech Talk, the YouTube channel. So there's my two choices. Thank
Dennis,
you.
One quick comment, Dennis.
Yeah.
ZTO just triggered a long trade today, just minutes ago. It took out yesterday's high.
Okay.
Yeah, just triggered an entry. Just wanted to point that out.
Thank you.
As we were talking. Yeah.
Yep. It did, just by a little bit. So it looks pretty good.
Yeah.
Now you're going to wait for it to close above that?
No, I'm in. I'm in now.
Okay, cool.
I had a standing order there, yeah.
Roger that.
Hopefully it holds, yeah.
Okay. Well, with that, hey, I just absolutely love this view. And,
absolutely, yeah.
That's actually looking off my back lanai. And so have a great day. Stay safe, everybody. And if you're, seriously, just this crazy coronavirus, we will get through it. We will get through this pandemic. We will basically be back into trading stocks the way we normally do. And just remember, get with me, get and follow us so that you'll be ready to start investing again when the market basically bottoms out and rolls back up. So, hey, you can get your check here. There'll be a little icon that drops in on how to get your Power Rank Elite watch list every week free. And there'll be a couple of other things that'll say, hey, watch the next video. So, okay. Aloha. God bless everybody. Thanks, Steve. Appreciate it.